looking at the value of your gold and silver stack once the big Wall Street investors show up, then this happens. Welcome to Silver Heist. Thank you to our returning subscribers and guests. We're a channel that likes to buy physical gold and silver, and we like a coin with a good story. If you like those things, please subscribe. I'm going to show you 3 different charts that show what happens to the value of your gold and silver stack once the big investors show up. The charts I want to share with you are not my eyes glaze over type charts. They're not highly technical. They're more conceptual, but yet important. The first chart I'm going to show you is kind of a theoretical, kind of the concept of it. Then I'll back it up with some charts of known bull markets, and we'll also look at what's happening right now and what that means to the value of your gold and silver stack. So the first chart to look at is a theoretical chart, and this is time, and this is the value. So what's critical on any kind of bull market, even a somewhat of a bubble market, whether it's gold, silver, or stocks, is that there's a different phases. So there's the stealth phase, and that's early, and that's a smart money. That's when people in the smart money buy when something is inexpensive. Then it becomes into the awareness phase, and it gets the interest of the institutional investors, and they really start to move the price action. And then we enter a mania phase, and then the bubble blows off, and there's a blow-off phase. So in between the awareness and the mania phase, it really starts to take off, and it's a combination of the institutional investors, the public, new money that wasn't there before. In terms of stacking, I think we probably all see ourselves as the smart money. We were here when it didn't interest other people, but what I want to show is that for the price to move, there has to be more people interested in it than just us. Okay, so the second chart I want to show you is a volume chart to show you how much activity is going, as well as the price increase. So if you're not familiar with ETFs, they're the way that Wall Street invests in metal, whether SLV or GLD. It's paying someone money to have a share of gold. This is effectively 1/10 ounce, and this is effectively 1 ounce of silver. And so the more money is entrusted with these folks, the more physical gold they need to put in the vault assigned to them, that they then give you your shares. So that's the way Wall Street invests in gold and silver, as well as future markets and stuff, which I don't have any familiarity with. But here's a simple way of looking at this. So one thing, so even forgetting the dip that happened in March, silver is up 49% for the year, and gold is up 27% for the year. But what's interesting is just looking at the volume. The price of the GLD is the green diagonal line that goes from 151 to 195, but the volume is that spiky bar graph below the word September or 2020. So the taller that bar graph is, the more volume or investor interest is going on. The volume for gold happened here and with the dip, and then here, as shown in these bar graphs underneath the word September in 2020. But silver, similar. So there's more interest in silver here, but then a lot here. Look at the volume along the bottom during this phase. So when we go out 5 years, look at the lack of interest in silver, except for recently. So we were the smart money, quote, buying silver when it wasn't popular. And now the institutional investor is showing up. And now they're showing their once every 10-year interest in silver. So look at the lack of interest all of this time, and now there's new interest with these spikes. Look at when they were interested in this last, back in 2010, 2011. So it's kind of like a chicken and an egg. Do they show an interest in it when the price is going up? Or does their interest in it create the volume and the competition that drives the price up? So for silver, it's only when there's high volume is the price action going up. And when they're not interested in it, the price action is pretty stagnant or somewhat sideways. Now gold seems to have a little bit more steadier interest in gold in the 5-year period. It's not as hot and cold as silver is, but you can see there was more interest in the 2010, 2011 range. That's the most volume. And right now, this is decent volume. So gold's a little different. I think there's more interest in gold throughout, but definitely more interest when the price is going up. And I've heard some commentators say that this is not a very beloved bull market. So the volume isn't even there yet, and look at the price increases we're getting. But that is about to change. Okay, so like that white photographic chart I showed you earlier, when the big investors show up, that is the beginning stages of a bull market. So I'm going to show you some major investors who are putting money into gold. As the gold market improves, the silver market also improves. So the first investor you may not be that familiar with, $400 million investment, someone by the name of Dalio. He is a hedge fund billionaire, runs an outfit called Bridgewater Associates. So in 2020, he put $400 million into the GLD Gold ETF, and he is their biggest investor. Now, someone you may be familiar with is this guy. And this is Buffett. Warren Buffett, a known gold hater who loves stocks, put $563 million into gold. Now, he put it into a stock ticker called GOLD. It is a gold miner, but he is putting money into the gold space. As the value of gold goes up, gold miners can do very well. So he's looking at this more as a stock owner, but yet he is in the space, which gives credibility that if Warren Buffett is investing in gold, then it's okay. Which brings us to actually one of the bigger recent investors, and that is this. $800 million. So the Ohio Fire and Police Pension Fund, who controls $16 billion, have agreed that they can put up to 5% of their $16 billion into gold. Now, I'm not sure what form they're going to put it in. That is a big pension fund who wants to invest in stocks and bonds to create an income stream and a fund they can draw upon to pay the pensions of the fire and policemen who have served their state for many years. They are now looking to diversify that. So all I'm saying is that the big investors are showing up into the gold market, whether it's a hedge fund billionaire buying GLD ETF, whether it's Buffett, a known gold hater, buying a gold miner, or a large pension fund who's looking to diversify their holdings. So when big investors move into gold and silver, this happens. They make it acceptable for people to buy gold, and the competition heats up and the price of gold goes up. If you want to see more silver and gold stacking, please watch one of our featured videos.